All right. Welcome to Coffee with Marcus and Mark, the number one stock market update show on Spotify and one of the most popular market updates on YouTube. In this show, we talk about what's happening in the markets and how we're trading them. Today is Tuesday, February 14th, Valentine's Day. And stocks start the week strong. CPI data surprise actually moves the market, and Palantir posts its first profit ever. We also have earnings from Coca-Cola and Marriott and Valentine's Day stocks on the move. We'll take a look. Plus, we'll review what we did with our CTRA position and see if there's even a better opportunity to sell calls today. So as you can see, there's a lot to talk about. Let's go ahead and get started. If this is your first time here, my name is Mark Hodge. I'm head coach at Rockwell Trading. I'm running the show by myself today, but on most days I'm joined by Markus Heitkoetter, Rockwell Trading's founder. Even though I'm solo today, you're in good hands, I promise. And you could say that we have a ton of experience at Rockwell Trading. We know our stuff and we're not afraid to tell it like it is. If you're looking for some good, honest insight into the world of trading, then you've come to the right place. Before we dive in and show you some of the trades that we're in and how we're tackling these crazy markets, let's take a look at what's moving the markets today. And let me go ahead, bring up my charts here. Looking at the S&P 500, we see that the S&P down a little bit here, down 0.3%. Actually, a little bit of a change here in the overall market sentiment from just a little bit ago. The Yesterday, a great start to the week. We see here that the S&P finished higher by 1.2%. So a real strong move. One of the highest closes, the third highest close of the year. So a nice start to the week. And then today it was about CPI data. We'll take a look at that. But before we do, we could also take a look at the Dow. The Dow, a nice strong day yesterday, up 1.1% as well, closing with its second highest close for the year. Then we had the NASDAQ. NASDAQ yesterday also higher, up 1.5% with a nice close. We see here that 50-day, 200-day moving average crossover, the golden cross, remains intact for the S&P. Also, the Dow, although that happened a while ago. The NASDAQ, not quite the case, but you see that 50-day moving average creeping higher, getting closer to that 200-day. So maybe a golden cross in the NASDAQ is on the horizon. It looked like with some early action today, this move would continue, but right now markets are down. The Dow actually leading the way lower, down 0.6%, but in the red a little bit overall across the board. Let's take a look at E-mini S&P futures, though. Go to a 5-minute chart, and we see here that there's a lot of movement today. Now, if we look at overnight trading, we see that it was a really quiet session, down just a little bit in the Asian session, and then getting a boost in the European session. We had a nice rally going into this 8:30 a.m. CPI report, and it was a bit of a surprise. Let's pop on over to PowerX Optimizer, and we see here that core CPI data came in line as expected. So the forecast was 0.4%, and the actual number came in at 0.4%. So no surprise there. We did see a tick higher in core CPIA CPI, CPIA, CPI, and a tick higher versus the previous reading of 0.3%. Now, CPI data, we actually came in at 0.5%, also in line with expectations. The prior reading was minus 0.1%. This actually got adjusted. So a little bit of a surprise here, because if you look at the forecast, you see that the forecast was 6.2%, everything in line with expectation, but then CPI data year over year, this a little bit higher than forecast, 0.2% higher. That's because the prior reading of CPI was actually revised. So coming in a little bit hotter than expected year over year, down a tick. So, you could say it's cooling a little bit from the previous reading of 6.5% year over year. but not a significant decrease in any way, and actually an increase compared to what was expected when we look at year over year numbers. So, not really an exciting CPI report here. And if we look at the reaction, let me just clear up the chart here and let's remove those 50-day and 200-day moving averages. There we go. If we look at the reaction, a decent amount of volatility here. We saw a quick move higher and then a pullback, about a 1.2% swing. Going into the U.S. Open, we were lower on a 5-minute chart. If we look at the S&P 5-minute chart, we were down after the Open, and then it was just up and away. 1, 2, 3, 4, 5, 6, 7, 8 consecutive 5-minute bars higher. And then that rally pause pulled right back. And right now we're trading right around where the market opened. So what a difference just less than an hour can make sometimes in the market. Right now it looks like traders are trying to figure out what the heck to do with this data. I saw a report or some commentary from JP Morgan saying that if CPI data year over year came in at 6.4 or 6.5% for the day, they expected the market to price in 1.5% drop approximately, something along those lines. Not necessarily the case, but it just goes to show that was unexpected, that the higher year over year number, and traders are trying to figure out what do we do now. What do we do now? Looking at the VIX is down. So there was some extra premium and volatility getting priced in early yesterday, even though we were higher. We ended up finishing slightly lower. Now that release is out of the way, the VIX is down, even though the overall market's down. Usually it's an inverse reaction, right? The market's going higher, the VIX falling, the market's falling, the VIX rising. Typically, not always the case, but that would be the usual. But it's no surprise here that after a major report like that, the VIX, the volatility index, aka the fear index, is lower with that news out. But what do we do? Well, let's look at the CME Fed funds futures and the probabilities. And this has actually changed from this morning, because initially when we were looking at the probability for a quarter point rate hike at the March meeting, it was still 90.8%. But since then, the probabilities have increased. Right now, a half point hike coming in at 6.3%. So traders pretty much saying, hey, the Fed's raising rates by a quarter point next meeting. And that's what we feel with certainty, at least for now. Of course, there's no certainty in the markets. Otherwise, it wouldn't be the market. But let's look at probabilities. And we can see here that things have shifted. And this is something that we've seen over the last couple of weeks, where the Fed was painting one picture and saying, hey, we are going to do what it takes to combat inflation. Inflation is a concern. It's significantly higher than the 2% inflation that we are comfortable with. And year over year, we're seeing, more than 6%. And we need to raise rates in order to tackle inflation. But traders were shrugging that off, at least for the last couple of weeks, saying, you say that, but we think it's going to be better than that. Now, though, we're seeing that traders are pricing in another quarter point hike at the June meeting. So here's that quarter point at the March meeting that we looked at, a quarter point in May, 80% probability. Now, it's a little bit mixed here in June, but more than 50% expect another hike, getting to that 525, 550 basis point range. And then traders now, based on Fed funds futures, say that we are likely to stay at this level, and maybe in December we get a rate cut. So this has shifted a little bit. At one point, this was falling even lower, and then we were just staying the same during the year, but not moving up to the 525, 550 range. But this is a little more in line with what the Fed has been saying. So it seems like traders are now saying, okay, maybe what you're saying has some merit, or the Fed, you're going to do what you said in the first place. Maybe a little bit slow to react at the beginning, but now at this point, they are ready to raise rates and continue to have worries about inflation and ready to raise rates to combat that. So, hey, we'll see what happens, but it does look like a quarter point is priced in at this point. The VIX has fallen with CPI data out. Traders trying to figure out what the heck do we do now. Pretty nice run up, actually a really nice run up in for the beginning of the trading year in 2023. Right now, trading near these highs, trying to figure out what's next. There are still some important reports this week. We also have earnings season winding down and traders keeping an eye on earnings numbers. Speaking of earnings, let's take a look at Palantir, PLTR. They had a huge day today, up over 13%. So this is one that had a significant run up during the pandemic and then a big decline in 2022. Found some support, and with this nice pop here at 13% higher, this comes on news that they reported its first quarterly profit ever in the company's history. And revenue came in better than expected as well. So investors liking that earnings reaction, better than expected earnings per share, better than expected revenue, and the first time it made a profit. So nice little jump there for PLTR. Another earnings mover. Let's look at Coca-Cola. So here we see Coca-Cola now down 1% all over the place. Opened lower, rallied, went positive. Now it's pulled back a little bit. They did have an earnings beat. They reported better than expected earnings slightly. They also reported slightly better than expected revenue. Their CEO said that while 2022 brought many challenges, we are proud of our overall results, in a dynamic operating environment. And traders, I would say, kind of indifferent. Good news, bad news, pretty much in line with the expectations. Not a significant move, and down just a little bit here, hanging tight right around the 60 mark. Another company reporting earnings would be Marriott, MAR, the ticker. Marriott up 1.2%, 1.25%. They had an earnings beat as well. Better than expected EPS, earnings per share. Better than expected revenue. So traders liking that. Up 2%, pre-market pulled back just a little bit. But a nice move for Marriott. Now trying to break through this resistance level. This is one that I traded a few times in 2022. I like it. Right now, support-wise, I see support at lower levels, so it's at a pretty nice run-up. But pretty solid stock and a nice move because of earnings today. Now, an upgrade helping out Occidental Petroleum. Let's look at Oxy, up 1.5%. Nice little move here. This is one that we've traded recently with the wheel didn't get assigned, but we were able to sell some puts on it. They had Goldman Sachs upgrade from neutral to buy. So traders liking that information there, and a nice little move. So it's Valentine's Day. Are Valentine's stocks moving or are they not? Let's take a look at 1-800-Flowers, FLWS, and down 6%. Is this a shocker or what? Well, it looks like the real move came on earnings. You had a big, nice earnings reaction, pull back, fill in that gap, pull back to this prior range here. This is where sometimes what seems like a given, hey, if everybody's buying flowers, then that should move the stock higher, or the earnings should be better. But there's two things. One, sure, it might be a big day for flowers or a big week for flowers, but traders are basing their decision to buy or sell shares of a company not on what's happening today, but what they expect in the future. So that's where some data gets priced in, or the expectation of a move gets priced in, and it can confuse new traders at times, thinking that something has to happen because of good news or fundamental news that would support a move higher. But in reality, it could be that the move has already occurred, right? This happened a lot with pot stocks, marijuana stocks as an example, where traders thought that the passing of legislation could be a big mover for some of these companies. And the movement came before there was even that discussion, and retail traders got excited about it. So not a surprise to me that this one had a nice little run up and now is down for the day. Let's take a look at another one. Hershey, HSY is the ticker. This one, okay, up a little bit. You see that we're trading near resistance here. It looks like earnings for both of these companies positive. So maybe that earnings move a little more significant. But I think that the key takeaway here, be afraid of or don't get too caught up in just a one-off event or something that is expected, because chances are if you're a trader thinking, hey, something should happen because of something, other traders have already thought about it. And this is where we go to our trade what you see, not what you think philosophy, because the charts tell you what you need to know. Now let's take a look at CTRA here. And CTRA, I mentioned yesterday, we reviewed CTRA, 4 opportunities to sell calls. And I asked, what would you do? What would you do? Would you try and sell the 26 call? That's where we're assigned the 26 call for this Friday. Would you go for next Friday? Would you try to sell a higher strike? And CTRA has moved higher since yesterday. So nice little follow through. We could actually go to PowerX Optimizer and look at the calculator here. And when we look at the calculator, let's just slide over here so I could see this week and next week's expiration. So for this Friday, interesting, 10 by 15 bid ask, 35% is available, but that 10 by 15 bid ask spread is what we had yesterday. So even though the stock has rallied, one day further, one day less to go to expiration, and that time decay in that option has basically kept the option at the same price that it was. So this is why we do like to sell calls earlier in the week if possible, or even the prior week if the numbers make sense, to take advantage of that time decay. That's really what we're after with the call premium. Right now, there's definitely that 30% available for Friday, but that was also what might have been considered yesterday. I think we were a little more on the 10 side for the bid. 11 cents was a line in the sand for 30%, including the extra day, but you had an opportunity to maybe get 15 cents. There was also the possibility to sell calls going out to the 24th, so going out 2 weeks. Now, Marcus and I, in general, we like going out 1 week to get that time decay with the goal to keep selling calls, right? Sell this Friday, let it expire, or maybe roll and then get the next week's expiration. So you're able to get more bang for your buck rather than just locking in a price. Now, the 26 for next week has increased, and now we're at 45 by 55. So you split that, you get 50. That's a nice little ROI, 57. Well, let's actually plug in the 50 cents. 63% annualized based on the days to expiration and the premium collected. So this is looking pretty good. Now, what I did and what Marcus did, we got 40 cents. And we went with the February 24th expiration. Reason why is CTRA does have earnings. Here we have confirmed February 22nd. This is Wednesday. They report after the bell. So we decided, instead of trying to get 10, 15 cents for this Friday, sell those calls that include that extra premium because of earnings. Right now, looking at the expected move going out to next week, we see that options traders have priced in a 5.25% move. It could be 5.25% higher or lower in that range. Well, one standard deviation says that in general, about 70% of the time, we're going to be between 24 and 27, just rounding. So that Yeah, we'll see. But that's that extra premium that's priced in right now because of earnings, and we decided to capitalize that, and we decided to go out next week. Had you waited a day and you're still looking to sell calls, hey, I think there's still some nice premium in next Friday. And with this move higher, with CTRA being up another 48 cents today, definitely some good, nice premium there. If you own shares of CTRA and if you're a call seller, it was a trade according to my plan and Marcus's plan, and we've sold calls at the 26 level, collecting some nice premium. And now it's just hurry up and wait, right? So that's going to do it for today's stock market update. If you like this video, if you like this analysis, please give the video a like and a thumbs up. And we'll see you here back tomorrow. I do believe Marcus is going to try to join me, even though he's in an Airbnb and the internet's a little bit spotty. He's trying to get that resolved so he could join me this week. Otherwise, I will make sure that even if you're just with me, that we're providing some nice commentary and giving you some tips and tricks, things that you might consider for your trading and your plan. So that's going to do it for today's video. Until tomorrow, happy trading, everybody.